company that owns everything in the world. That might sound straight out of a conspiracy theory, right? But it's not. The company is BlackRock.
Bigger risks without the attended risk technology to
manager, which handles over $7 trillion in direct management.
Majority of people who are putting money in an index, in ETFs, are active investors that are
taking this position. What is it that, in your opinion, BlackRock is doing that you don't like?
More confidence in me than I had myself. They wanted to go right ahead.
And you must see what this company is all about and who the mysterious figure behind it is. Now we're going to talk about one of the biggest financial companies in the world. Before we dive deep into the topic, let's see what BlackRock actually is. BlackRock is an American multinational investment management corporation that was founded in 1988 by a group of individuals who believed that they could use technology to simplify the complex world of finance. Since then, BlackRock has become one of the largest investment management companies in the world, managing over $9 trillion in assets. Yes, 9 along a T. So, how is BlackRock a company that owns everything? To understand this, we need to look at what the company actually does. First, let's start with the basics. BlackRock is a massive investment management company with its headquarters located in New York City. But don't let that fool you. This company has a global reach and is one of the most powerful players in the financial world. So, what does BlackRock do exactly? Well, it's responsible for managing assets for individuals, institutions, and even governments. This includes investments in stocks, bonds, real estate, and more. In fact, as of 2021, BlackRock had over $9 trillion in assets under management, making it the largest investment management company in the world. But how did BlackRock get so big and powerful? It all started back in 1988, when the company was founded by a group of investors who had a vision of creating a better way to invest. Over time, BlackRock grew and expanded its services, acquiring other companies and building a reputation for its expertise in managing money. Fast forward to today, and BlackRock has become so influential that it's been dubbed the world's largest shadow bank. That's because it's not a traditional bank, but it still greatly impacts the global economy. Now, among the data available on the company, the most interesting thing is the mysterious CEO behind it. Larry Fink is the name behind it. But why is Larry Fink so mysterious? First of all, he rarely gives interviews or appears in public. You won't see him making the rounds on news shows or at conferences. This is a clear contrast to other CEOs in the industry, who often use their public persona to promote their companies and agendas. In fact, Larry Fink has been described as the most powerful person in finance that you've never heard of. He's like the Wizard of Oz, pulling the strings behind the scenes but remaining hidden from view. So, what's the deal? Why does he keep such a low profile? One theory is that he's just a private person who prefers to stay out of the limelight. After all, managing the world's largest asset management firm is a big responsibility, and he may not have the time or desire to be a public figure. But there are other theories as well. Some people believe that Fink's mysterious persona is part of a deliberate strategy to maintain BlackRock's dominance in the industry. By staying out of the spotlight, he avoids drawing attention to himself and his company, which could potentially invite regulatory scrutiny or competition from rivals. Another theory is that Fink is a master manipulator who uses his behind-the-scenes influence to shape global finance and politics. Now that makes BlackRock more interesting, huh? Alright, let's come back. How does BlackRock manage to own everything? You see, one of the things that set BlackRock apart from other investment firms was its use of technology. They developed their own software called Aladdin. Now, what exactly is Aladdin? So basically, it looks like this software wasn't something new. Yes, Aladdin is an investment management system that was created by BlackRock back in 1988. It's a comprehensive platform that provides financial professionals with tools to manage assets, risk, and operations across the entire investment lifecycle. Essentially, it's a one-stop shop for investment managers, offering them access to a range of analytical and reporting tools and allowing them to manage portfolios, evaluate risks, and make investment decisions in real time. But how does Aladdin software help BlackRock to own everything? Well, let's start by talking about the sheer scale of BlackRock's operations. As of 2021, the company had under management $9.5 trillion in assets. That's an unfathomably large number, and it means that BlackRock is one of the most powerful players in the financial industry. One of the key ways that Aladdin helps BlackRock to maintain its position of dominance is by allowing the company to manage risk more effectively. With so much money under management, it's essential that BlackRock can accurately assess and mitigate risk in its portfolios. Aladdin provides a range of tools that allow BlackRock to do just that, from scenario analysis to stress testing to comprehensive risk reporting. But Aladdin is more than just a risk management tool. It's also a powerful data analytics platform that allows BlackRock to make more informed investment decisions. The platform provides access to real-time data on everything from market trends to individual asset performance, and allows investment managers to slice and dice that data in a range of ways to gain insights into potential investment opportunities. Perhaps one of the most impressive things about Aladdin, however, is the way it integrates with BlackRock's operations more broadly. Aladdin is not just a standalone platform, but an entire ecosystem underpinning BlackRock's business. It's seamlessly integrated with the company's back-end systems, allowing investment managers to move seamlessly between Aladdin and other platforms as needed. Another key benefit of Aladdin is the way it allows BlackRock to operate more efficiently. By providing investment managers with a range of powerful tools and streamlining a range of processes, Aladdin allows BlackRock to do more with less. This means that the company can manage its huge portfolio of assets with a relatively small team of investment professionals, allowing it to operate with incredible efficiency and speed. Now that's what the Aladdin software does for them. Now, another factor that contributed to BlackRock's success was its ability to adapt to changing market conditions. You see, the financial world is constantly evolving, and companies that can't keep up get left behind. But BlackRock has always been one step ahead of the game, and that's why they own everything. So, how do they do it? First of all, BlackRock has an incredibly talented team of analysts who are constantly monitoring the markets. They're always looking for trends and patterns that could indicate a shift in the financial landscape, and when they see something, they act fast. If you remember, back in 2008, when the housing market crashed, BlackRock was quick to realize that there was an opportunity to invest in distressed assets. They set up a special fund to do just that, and it ended up being one of the most successful funds in the company's history. But it's not just about reacting to market changes. BlackRock is also proactive in anticipating them. As we said before, the software helped them analyze every market condition. And it's not just about investing in the right things. BlackRock also knows how to manage risk. They're constantly assessing their portfolio to make sure they're not overexposed in any one area. This is crucial because it minimizes the impact of any unexpected market shifts. Finally, they're not afraid to admit when they're wrong. If something isn't working, they're quick to pivot and try something new. This willingness to take risks and embrace change has helped them stay ahead of the curve. Anyways, now that we have seen what pushes them, let's see. What does it mean for BlackRock to own everything? Well, it means that they have significant influence over many of the world's largest companies and assets. For example, BlackRock is the largest shareholder in companies like Apple, Microsoft, and Amazon. They also have significant holdings in the world's largest banks and oil companies. Well, it's not quite as dramatic as it sounds. When we say that BlackRock owns something, what we really mean is that they own a portion of it. For example, if you invest in a mutual fund or an ETF that's managed by BlackRock, you own a small portion of the underlying assets. So why should we care about all of this? Well, for starters, BlackRock's sheer size gives them a lot of power and influence. They can move markets with their investment decisions and pressure companies to make changes that align with their values. They also have a lot of ways when it comes to things like corporate governance and executive compensation. So there are these massive concerns about BlackRock's dominance in the asset management industry. Some critics argue that their size and influence make them a potential systemic risk to the global economy. Others worry that their focus on passive investing, like investing in index funds and ETFs, is leading to a lack of diversity and competition in the markets. But others argue that BlackRock's size and influence are actually a good thing. You might be wondering, how's that? Well, first of all, BlackRock's massive presence means that it has the power to push for positive change. For example, it has been a strong advocate for companies to prioritize sustainability and environmental responsibility. Through its shareholder activism, BlackRock has been able to influence companies to take steps toward reducing their carbon footprint and promoting sustainable business practices. Moreover, BlackRock's influence can be a stabilizing force in times of economic uncertainty. As we spoke before, during the 2008 financial crisis, BlackRock was able to step in and help stabilize the market by buying up distressed assets. This not only helped prevent a complete collapse of the financial system, but also helped jumpstart the economic recovery. But perhaps the best argument for BlackRock's size and influence is a good thing is its ability to provide access to investments for everyday people. BlackRock manages a variety of funds, including index funds that allow individuals to invest in a diversified portfolio of stocks and bonds. This provides an easy and affordable way for people to grow their wealth and achieve their financial goals. Anyways, one thing that we can observe is that BlackRock is a massive player in the world of finance, and its influence is only growing. While there are certainly benefits to having a well-run and successful asset manager like BlackRock, there are also valid concerns about their power and influence. As with most things in finance, the answer is probably somewhere in the middle. So what do you folks think about BlackRock? A boon or a curse? Thanks for tuning in. Do drop your views in the comments section below. We'll catch you in the next episode. Until then, stay tuned.